Hey everyone, glad to have you back for another episode. If you don't understand the specific traits of different market sessions and are placing trades at arbitrary times during the day, you're overlooking a crucial element of trading: timing. In today's video, we're going to break down a highly effective trading strategy we've built around ICT kill zone principles. You'll learn what the London kill zone entails and how to leverage this insight to gain an edge. We'll teach you how to interpret price action and market structure like a seasoned trader when the kill zones occur, and how to pinpoint liquidity zones, supply and demand levels, and prime trading setups. If you're into mastering advanced trading tactics, identifying entries, and sticking to a disciplined trading framework, hit subscribe and dive into our advanced. What exactly are kill zones? Kill zones refer to specific periods during the trading day when significant liquidity enters the market, creating ideal trading setups. In this video, we'll be focusing solely on strategies centered around the London kill zone. So, how do you spot the London kill zone? Launch your chart on TradingView and head over to the Indicators tab. Type in WR Market Sessions and choose the version created by Leviathan. This indicator displays all market sessions, but we'll need to tweak it. In the Settings panel, uncheck Tokyo, New York, and Sydney sessions, then modify the London sessions close time to 1300. This will display the London kill zone on your chart. Next, make sure the period separator is turned on. Right-click on the chart, open Settings, and under the Events tab, enable Session Breaks. You'll now see vertical lines separating each trading day. So, why is it important to highlight the London session? The London session has distinctive traits that set it apart from the rest of the trading day. A significant surge of liquidity flows into the market. As the London session kicks off, currencies like the euro, pound, franc, and commodities like gold become highly active. This means that currency pairs involving these assets are likely to show the price movements we aim to capitalize on in the market. The second key point is that as the London session opens, fresh market participants enter the scene, causing price behavior to differ from what we see during the Asian session. This can lead to the emergence of new trends forming on the chart. Third factor is that the levels created in this session have more value for us. Usually the high and the low of the day are created within this trading session, so the conditions are ready to make the most out of the high probability trading opportunities we receive. Now, how to use this knowledge in our trading system. During the Asian session, we often see significant liquidity build-up. For instance, take a look at this chart. This is the euro-dollar on the 15-minute time frame. This zone has firmly rejected price action on 2 occasions. Within the Asian session, there's a long wick rejection followed by an engulfing candle, indicating strong bearish pressure. Traders who entered short positions here likely set their stop losses just above that wick, meaning there's a concentration of liquidity above this level. Now let's observe what unfolds as we enter the London kill zone. As the session kicks in and fresh traders enter the market, price initially moves up, sweeping the liquidity resting above this wick, then sharply reverses and targets the liquidity sitting beneath the day's low. As discussed earlier, the influx of new participants in the London session causes a shift in market dynamics compared to the Asian session. This leads to fresh trends and structural shifts on the chart. Once again, in this case, as the London kill zone begins, we see a liquidity sweep below this low followed by a complete trend reversal to the upside. So, how can we tell that this breakout isn't a genuine continuation but rather a liquidity grab? There are 2 major signs to watch for. First is the fake out. A fake out, also known as a failed breakout, happens when price pushes past a structural level but quickly reverses back within the existing range. Picture the market in an uptrend, breaking above a resistance level. Normally, if price revisits this zone, the resistance acts as support, and we look for a rejection. However, if price slices right back through, it's known as a fake out, suggesting strong momentum in the opposite direction and hinting at a potential trend reversal. This fake out serves as an initial clue that the move was simply a liquidity grab, which is later validated by a change of character. To spot a confirmed change of character, first we mark the lowest point of the latest swing low that created 2 consecutive highs. Then if we get a break and close below this low, it signals a possible shift in the current trend and confirms the fake out. Now let's return to the chart and read price action where the London kill zone begins. But before we continue, if you want us to make more videos more often, don't forget to like this video to show your support and comment below and tell us what topics you want us to cover in future videos. Let me walk you through exactly what to look for as the London kill zone kicks off. We begin our technical analysis using the 1-hour chart. On this time frame, we first determine the market's overall direction, as we aim to trade alongside the prevailing trend. Next, we highlight key zones and major swing points that could potentially reject price. While it's possible to conduct a top-down analysis for broader context, avoid spending time assessing structure from the monthly chart. If you're trading the 15-minute time frame, reviewing 2 higher time frames is more than sufficient. In the second step, we shift focus to the 15-minute chart for trade entries. At this stage, we mark the most recent and relevant liquidity levels, especially the current day's high and low formed during the Asian session. From here, we typically observe 3 common setups that tend to appear at the start of the London kill zone. In the first setup, price targets liquidity beyond the day's high or low formed during the Asian session. After sweeping that liquidity, it continues to move in the same direction as the prevailing higher time frame trend. Once the sweep occurs, we apply smart money concepts to the chart, spotting fair value gaps, supply and demand zones, order blocks, structural breaks, and ultimately the ideal trading setups. We then take trades that follow the dominant trend. I'll now walk you through the remaining setups using actual chart examples to make things clear. Just keep in mind, before risking any real capital, you should backtest your strategy at least 100 times across various pairs to gauge its accuracy and build the necessary confidence. However, be aware that backtesting can be quite time-intensive. In the second setup, the market has already accumulated sufficient liquidity ahead of the London kill zone start, allowing the price to keep moving in line with the higher time frame trend. Again, we can make precise trading decisions by aligning the overall trend, marking key levels, and waiting for confirmation from lower time frame price action. In the last scenario, price moves to clear liquidity above or below the day's high or low formed during the Asian session, and then we observe a full reversal in market direction. Now we'll walk through real chart examples to give you a step-by-step breakdown of our thought process as the London kill zone gets underway. On the GBP, 1 United States dollar hour chart, we observe an upward trending market with price repeatedly breaking structure to the upside, indicating strong buying momentum. We classify this market as bullish and seek long setups while price remains above this higher low. Another significant level to note is the recent high, which serves as our higher time frame target. Now, let's drill down to the 15-minute chart. First, keep in mind that the higher time frame trend is bullish, so our focus is solely on buying this pair. Next, we'll mark the critical liquidity zones, the high and low formed during the Asian session. It's clear that many traders have entered long positions around this support area, so an ideal move for the smart money would be to push price below the day's low, collect the needed liquidity, and then resume the upward momentum in line with the prevailing uptrend. Now, let's observe what happens next. An aggressive entry would involve buying this pair as soon as these candles closed back inside the range following the fake out. However, a more cautious approach is to wait for a confirmed change of character signaling the reversal, then enter on the pullback. Conservative trading is less stressful and carries lower risk, but it often results in missed opportunities, an unavoidable part of trading. On the GBP, 1 New Zealand dollar hour chart, the market was trending strongly upward until it hit this level. The price rejected this zone multiple times before finally reversing, shifting our bias to bearish. At this point, we have a chance to take short positions, with our target set at the unmitigated demand order block just ahead of the price. Now, let's switch to the 5-minute chart to pinpoint short entry opportunities. On the 15-minute chart, we observe large candles forming alongside fair value gaps, signaling bearish momentum. This zone represents the high of the day and holds significant liquidity above it. Currently, the market has gathered sufficient liquidity and formed an unmitigated order block, offering an ideal short entry aligned with the prevailing downtrend. We can place a sell limit order exactly at this order block and aim for a target of twice our risk. Again, we observe clear fair value gaps, a break of structure, and another bearish order block, so let's set another sell limit order as there's still time before the London kill zone closes. These examples demonstrate how to interpret price action and market structure when the London kill zone starts, but always remember to stay patient. If a trade doesn't fit your trading plan, feel free to skip it. More trades don't necessarily equal more profit, so learning to wait for high-quality setups and filtering out low-quality ones is a crucial skill to master. Alright guys, I hope this video added value to your trading journey. If it did, Please hit that like button to show some support, and if you're new here, don't forget to subscribe to our channel. Catch you in the next episode.